Welcome back to Tashkid FX for another quant price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the quant chart, which at the time of this recording we have managed to lose a key area of support at around the $147.9 mark. We have also lost the 20-day MA here on the 4-hour chart, and we are just about to fully maximize the target area that I had given you in my previous videos. And the good thing is that quant has continued to obey the Elliot structures. And before I get further into the technical analysis, make sure that you first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to start the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that quant, after making it to an all-time high, we started the bear market where we had been seeing no prices in this ABC corrective structure, which took us back to around the $40.1 mark. And after seeing the bear market low, we started a very nice bounce to the upside in a move that had been obeying the Elliot structures, where you can see that I have this Elliot structure in blue having the wave 5, making its peak at around the $229 mark, and also completing a larger Elliot wave count 1 to the upside. And after seeing the formation of that first wave to the upside, whatever we expected next is a corrective structure in the formation of a larger Elliot wave count 2. And in the formation of that wave 2, we also expected to see an ABC corrective structure, having the wave C giving us the low for that wave 2. And you can see here on the charts, we also have this red target area that I came up with using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1. And that gave me the minimum target area that we expected to see the low for that second wave. And we have seen the low for that wave 2 at around the $94.4 mark. And I believe whatever we are seeing at the moment is the start of a bounce to the upside in the formation of this larger Elliot wave count 3. And this is what I'm expecting on the long-term scenarios, and sketching out a minimum target area to the upside in the formation of this wave 3 using a trend-based Fibonacci, connecting it from the low of the first wave to the high of that wave 1, then dragging the Fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the Fib level 1.618, which perfectly lies at around the $400.5 mark. And that is the minimum that I'm expecting quant to do on the long-term scenarios. And getting to the short-term scenarios, basing it on the formation of this wave 3, which is an impulsive wave, and because of its impulsive nature, we also expect to see a 5-wave structure in formation, where I believe we have seen the formation of that first wave, we have also seen the formation of that wave 2, we have also peaked in the formation of this wave 3, and whatever we are seeing at the moment is a corrective structure to the lower side in the formation of this wave 4, before we can expect one more bounce to the upside in the formation of that wave 5 to complete an even larger Elliot wave count 1, which is a fractal wave within the formation of that larger Elliot wave count 3. And getting to show you that this wave 3 might have peaked using the trend-based Fibonacci, connecting it from the low of the first wave to the high of that wave 1, then dragging the Fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the Fib level 1.618, which perfectly lies at around the $164 mark. And that is the minimum that I expected that wave 3 to the upside to do. And you can see we have peaked in the formation of that wave 3 and also made a high above our target area at around the $165.5 mark. And having done so, then I have every reason to believe that whatever we are seeing at the moment is the start of a corrective structure in the formation of this wave 4. And using the Fibonacci's, connecting them from the low of the second wave to the high of that wave 3, that gives me a minimum retracement area in the formation of that wave 4 between the Fib level 0.382 and the Fib level 0.5, which lies between the $141 mark and the $133.4 mark. And it is within this red target area that I'm expecting to see the low for that fourth wave. Then from there we can expect one more bounce to the upside in the formation of that larger Elliot wave count 3. And having lost a key area of support at around the $147.9 mark, we have also lost the 20-day MA, which now both are acting as resistance. Then there are chances of continuing to push even lower to fully maximize our red target area in the formation of that wave 4. And once that happens and we make one more low here, then we can term the new low as the formation of that wave 4. Then we can expect one more bounce to the upside in the formation of that wave 5 to the upside. But we also need to have in mind that having manage to get into this red target area between the fib level 0.382 and the fib level 0.5, there are chances of having seen the low for this wave 4 at around the $137.2 mark, and whatever we are seeing over here could be the start of a bounce to the upside in the formation of that wave 5. And for that to play out, we need to manage to break above the key area of resistance at around the $147.9 mark. Expect a retest of that key area of resistance, and once the retest is in, we need to continue pushing even higher and also manage to break above the wave 3 high at around the $165.5 mark. And in case such a move plays out, then that will be enough confirmation that that is the start of that higher Elliot wave count 5 to the upside. But as long as we are holding below that key area of support and also below the 20-day MA, there are still chances of making one more low in the formation of that wave 4. And once that plays out, then we can expect that bounce to the upside in the formation of that wave 5. And taking a look at the indicators so that I can see what movements will be supported here on the RSI. On the RSI, we are trading at around the 39 mark, meaning we have massive room for us to support movements to the lower side in the formation of this wave 4 to fully maximize our target area. And we also have massive room for us to see a reversal to the upper side in the formation of that wave 5. And also taking a look at the MACD, we have been able to print a bearish cross, fully supporting lower prices in the formation of that wave 4 to the lower side. So let's be patient and see how that plays out, and I'll be keeping you updated.